Good afternoon, everyone. We've got some time today to really talk about the institutionalization of Bitcoin and how we've seen the market structure change over the past year. But before we get into it, you guys represent some great companies that have been in the Bitcoin space for a long, long time, doing all sorts of stuff. But let's hit it with a quick round of intros. Tommy, if you want to kick it off.
Sure. Hey guys, super excited to be here. My name is Tommy, and I'm the head of DeFi investment at Crypto.com Capital. We're the venture investment arm for the Crypto.com exchange. The total fund size is $500 million, and so far we've invested in over 100 projects across blockchain infrastructure like layer 1, layer 2s, applications, DeFi, etc. And before that, I was working at investment banking, mostly covering like TMT sectors in APAC. So yeah, great to meet everyone.
Hey, I'm Björn, the CEO of Aurelion. We're the first NASDAQ-listed Tether gold treasury. So we buy digitalized gold and generate yield on that. Before focusing on gold, I've started Penguin, which is one of the biggest Bitcoin miners in South America.
Hey all, Dave, co-CEO at Kraken, OG crypto exchange, now the coolest crypto platform out there.
Great. Well, our topic today is really about institutionalization and market structure. So we've really been calling 2025 the year of institutionalization of Bitcoin. The suit coiners are out in full force here with really the approval of the spot ETFs in the US kind of kicking off this theme. How have you guys seen really the market structure and that institutionalization play out across the year? What looks much different today than it did 12 months ago?
Yeah, perhaps I can go first. I think the single most important contributor is the regulatory clarity. In the US, like this year, we have the Genius Act, right, which defines like the stablecoin regulatory framework. And then we are expecting like the Clarity Act, right, on the pipeline. And in Europe, we have the MiCA, and also in Middle East, we have a lot of like progress in the regulation. And also in Hong Kong, right, we have the stablecoin framework by the HKMA as well. So a lot of these regulations, they might not be directly tied to Bitcoin itself, but actually gives a lot of confidence to the more conservative and traditional institutional investors in the industry as a whole. Because if you think about Bitcoin, it is the first cryptocurrency, and this is the staple of the industry. So there will be like always a gap or delay between like these more conservative capital to deploy into like the latest like regulatory like clarity assets. So right now we are seeing like the stablecoin, we're seeing the investment vehicle being defined, but for the investors, now they are the time to deploy into Bitcoin. So that's why we're seeing that there's so much capital flowing into Bitcoin in these 2 years.
Well, I think we're in a very interesting time right now where a lot of the OGs, original, kind of like start to lose interest, get out of it, right? And it becomes more apparent that it's a marathon, not a sprint for Bitcoin to really conquer reserve asset status. And I think right now it's still, arguably trades like a tech stock, right? And I think it really has to get there to be this defining asset class by itself. And my personal view on that is that we probably need to go from a market cap of just below 2 trillion where we are right now to a market cap well below probably 30 trillion where gold is, right? So it's a long way there. It means that we need to get to a million per Bitcoin and maybe to 10 million a Bitcoin. And I think if we look at the historic growth, right, arguably many people thought it's exponential and set up expectations that we're going to hit a million soon. Things like this, and I think now we're kind of like all trying to figure out, hey, why we're not moving upwards, right? We always hope that Wall Street will come in. Now Wall Street is here, right? And we're dealing with a very interesting issue, right? Which is now that Bitcoin is part of the mainstream financial idea, I guess, not fully adopted, but on the way to it. We're now seeing something I would call paper Bitcoin, right? And just like what we had in gold, an issue, right, that we really has been around for a very long time. Paper gold will probably now have something like paper Bitcoin. We'll have to deal with it, and it's not immune against it. So I think we're somewhere in the middle of this. I think Bitcoin price has been historically growing with a power of 6 over time. I think if we continue on that trend, we'd be somewhere at 20-30 trillion market cap, 2035. So I think we're seeing this path, but it's definitely a longer journey than you would think today.
So I've been over at the FinTech Week hanging with all the TradFi guys for the past like 24 hours or so. Here comes Tyler, wants to talk about institutions again. I was like so excited to be here with all the Bitcoiners, and here I am having to talk about institutions. Look, I think it is actually pretty meaningful. I mean, the long arc of history, we've been, kind of talking about like, when are the institutions coming? When are they coming? What's gonna trigger them to jump in? The reality is, if we kind of like think about it pretty broadly, across, since roughly around when I got in 2013, we've seen different groups of institutions come in throughout all those years. So the first group were like the venture capitalists. This is a little bit of a loose definition of institutions, right? The VCs, they came in, call it like 2013 or even before. Investing companies, some like starting to actually own tokens. The next group were the high frequency trading firms. They came in around like 2015, 2016, and all the big guys got in around that time. So you had the kind of the tokens coming to being, the exchanges launched, you started getting activity, these high frequency trading firms came in, that was like step 2. Step 3, around like the run up into 2017, not much else happened beyond those 2 pieces. And then after 17, you kind of got some TradFi guys, unexpectedly, the fintechs, they kind of came in. That was when like Square and Revolut, PayPal, all these guys kind of came into the marketplace. And that takes us up to 21. And then 21 was like a meaningful one. We actually had the first kind of like buy side institutions. Remember this Paul Tudor Jones, those like, things hitting the media. That was kind of like, some of those guys were actually buying, on the back end. And so that was meaningful. And then you also saw your first kind of like corporates as well. That's when MicroStrategy got going. Tesla, Square, a few others kind of dipped in, but it was all of those pieces there, the hedge funds and the very minimal, just barely scratching the surface. And then finally we come to 24 and, this year, 25, we see a lot more institutions come in, and frankly, the biggest mechanism that brought a lot of them in was the ETF. The ETFs launched, and you had meaningful adoption among hedge funds, meaningful adoption among RIAs, their client bases, and then a number of other, funds, a few sovereigns dipping in and so forth. And so we now like actually see, now ETFs are pretty narrow from a product standpoint, but that's like the next, that's like the most meaningful kind of uptick on the buy side. What's going to happen in 2016 is all of the sell side banks and brokers, the biggest ones out there, they're going to now come, who basically serve these guys as customers. They're all working on building in their first like crypto Bitcoin plays. They're all going to launch, I'm talking the biggest banks, the biggest brokers, the sales and trading desks, they're going to all launch, and that's going to like in turn drive like another wave of institutions on the buy side to come back around once they're like, oh my gosh, this is familiar, right in my same custodian, all these different pieces.
Well, Dave, you just touched on some of this adoption arc we've seen, but some of the large players we've seen come into Bitcoin, some sovereign funds, a lot of hedge funds, some big pension funds. How much do you think these folks are actually coming into the ETF because they buy into the Bitcoin story and the value proposition, and they're sold on Bitcoin, versus just seeing it as another asset class that Wall Street can trade and can basis trade and can build structured products and can generate fees around?
I think it's mixed, and it depends on the firm. I would say you'd like to believe the former is the bigger chunk, right? And I'd say that is probably true as far as like number of firms out there. Because remember, all the like trading firms and HFTs, they've been in for a while. A lot of those guys are the ones that are arbin across the ETF versus the underlying and all that kind of stuff. So I think for the most part, the funds that are in, they're coming in because now look, they're just developing their thesis on it. They're building their views on the asset class. A lot of the hedge funds that come in aren't necessarily the really long-term guys. They're horizons of 1 month to a couple years type investor, which is different than like an endowment, a salver, and a pension who are like more, 5+ year time frames, right? So you kind of have that, and so that type of institution is in now. We're thinking a little bit shorter term. And look, that next cycle, I think we get all, big influx of the longer term guys and be another big tailwind for us.
Let's hope. Hope we get some long-term investors in here. With that kind of adoption arc and that investor profile you mentioned, like, how have each of you seen really the market structure in Bitcoin change as a result? Obviously, we've got a year with much more muted volatility compared to what Bitcoin's seen historically. And we've also got, a phenomenon where Bitcoin dominance has been rising over the year, or at least more steady, where it's been a bigger center of gravity. What are you guys seeing from your exchanges, your companies, the counterparties, and investors you work with?
As a venture capital investor, right, we see a lot of like startups and projects. So we're supposed to be the first one to understand the market trends and where we are heading. I think there are two major things that I want to add on this is that first, we're seeing a lot more companies focusing on the equity values, which means that they could be building some kind of like payment service or just like a service providers that have a more traditional business model that are generating revenue through like USD or some very like traditional revenues model. So which means that right now, a lot of the investors, they're focusing more on like how can this company generate cash flow, generate profit, instead of when are they launching a token, when can they get on all the biggest exchanges. So I think this is the first like biggest shift. And this is actually contributed by like the adoption of Bitcoin, because now more of the traditional investors are into the game. They want to be a part, and they value a lot of these like equity value of the companies. And the other thing is that we are also seeing a lot more like IPO activities, right, in the traditional stock market, which means that as an investor, you have much more exit opportunities and things that you can make money off, right, instead of just waiting for your portfolio to launch a token. And the second thing is that a lot of projects right now are doing like RWA or tokenization, which are very popular among builders. And a lot of these are about how do we bring on the pre-existing real-world asset on-chain. So these tokens, it could be tokenized T-bills, it could be money market funds, it could be even like stocks. And these are not natively on crypto. Because when we normally talk about like Bitcoin dominance, we are normally referring to, okay, the market cap of Bitcoin relative to the whole cryptocurrencies, right, including all the layer 1, layer 2s, all the DApp coins, or even some of the meme coins, right? But right now we are seeing a lot more of the old existing assets being put on chain. And I think this is actually a healthy and progression of the industry.
So it's very interesting, right? Like a lot of investors have been accumulating insane amounts of resources by betting on Bitcoin and Bitcoin going up. And what we're seeing, right, as a gold treasury company in particular, is that a lot of companies and our investors are now looking into, okay, is Bitcoin forever going to go up? Where is the cycle, right? Like we're all looking for the cycle, obviously. Is it a 5-year cycle now? Is there no more cycle? And so I think it's very interesting to look what like some of the bigger players do. So if you look at Tether, right, they've accumulated an insane amount of gold. In fact, they've probably bought more gold than any country or any other institution in the last quarter. And I think now they're actually the biggest holder of gold, aside of around 30 central banks, which is pretty meaningful, right? And they came out of nowhere doing that. And so before, of course, they bought a lot of Bitcoin, and now they're like, okay, we're having this size now, right? And there's a lot of other companies in the crypto space that we're having conversations with that have the same kind of thought, right? We've lived on the volatility. We've gone through all this kind of like, hodl pain. And now going forward, is it the right thing to do, right? Or does it make sense to diversify? And I think one very underlying, very important thing that continues to be very strong is the debasement trade, right? Like everyone, I think in Bitcoin to some extent, at some point has been happy about the debasement and be like, hey, I'm long debasement. And I think it's probably a trade that will continue to be very meaningful and very important. And the three most important things probably is like Bitcoin, gold, and land, right? But if you look at Bitcoin and gold, they profit from it very differently, right? And I think I think that is something that we're seeing more and more institutions that are long-term players in the Bitcoin space starting to adopt and move to some extent into gold and starting to develop an interest in it. And maybe also kind of following up on the RWA topic, I think this is extremely important, right? Because thanks to real-world asset tokenization, we now have tokenized gold. And I think that is really something that brings that transparency to the gold that before, it wouldn't make sense for a crypto person to start buying gold bars. That wouldn't feel right? But now that the gold starts to live on the blockchain, I think it's a very, very interesting situation, and we see some very smart players in the industry making some very big bets on this.
To keep going on the gold theme here for a little bit, like how do you see kind of the Bitcoin market structure evolving compared to gold? And obviously with the common criticism of gold that you mentioned, where gold is physical, it's very expensive to custody and settle, and so we've relied on central counterparties like the London Metals Exchange, where prices are set based on paper gold derivatives, where the prices are set at the margin. Do you see that same market structure coming to Bitcoin, or does Bitcoin's market treatment, settlement, execution, clearing look differently, or is it just going to be another asset class packaged by Wall Street in the exact same way?
I think it's interesting because we get all these names for Bitcoin, right? Digital gold. What's in the white paper, like digital cash or whatever it is, right? The reality is Bitcoin is kind of all of these things in a way, right? So it is this, deflationary, inflation-resistant asset that is an incredible store of value. It's also a currency, which is, that first piece tends not to be true for almost all fiat currencies out there. It's also a currency that's used for payments and all these various different types of things, settlement, part of financial institutions. It's also kind of like a new technology, so it behaves in a lot of ways like, risk asset, like equity or, large tech company or whatever, where it's like a innovative technology and the use cases grow for this technology and the adoption grows. So it kind of has properties, at least today, and this, will ebb and flow over time, or, maybe potentially more people use it for payments as we move forward. And so I think all these different pieces really impact what it looks like from a market structure standpoint, how that Bitcoin is going to behave through all these various different cycles, and it will shift. Back in the day, Bitcoin was like, we used to always talk about like it's this innovative financial thing, and it's totally uncorrelated with any of the other markets. We used to say that all the time. We're like, this is like something that's like new, and it just has never been seen before. Well, of course, it's correlated now, and that's really a big part of that is the kind of like that last prong, which is the tech side of it, behaving more like a tech company, a risk asset, from a trading and investing standpoint, because in a lot of ways it is this innovative technology you could build upon and all these types of things, much the same as, an actual tech platform built by a company. So I think that, who knows, maybe it could actually develop some other, attributes such that it, even takes on other dynamics within financial markets. So I think it's actually special, but I don't think it will gravitate towards any one thing in the near term, because right now it's all of these, and I don't see any of those going away.
To follow up on that, I think a good asset is something that is I think the panel is called something about gravity, right? Isn't it? And so when we think about gravity, we think about physics, right? And I think good assets have something to do with physics. Bitcoin is an amazing asset because it's backed by energy, right? It's proof of work, and it is truth. Physics is the science of truth. And so is gold, right? Gold is proof of molecules, if you want. And it's very difficult to produce gold molecules out of anything, just as it's very difficult to produce Bitcoin without energy, right? And so I think that's the first very, very important property that good assets have to have that eventually will evolve and have a very long life. And in gold case, we have 5,000 years. In Bitcoin, we have, I guess it's soon to be 17 years, is that right? Hopefully, 16, 17, something like that. So it's a teenager now, right? Not like a millennium, like 1,000-year-old monster. And so I think the very important thing here is to the extent that this holds true, right? That Bitcoin is based in truth, it will serve society and it will serve humanity, and we've seen what can go wrong, right? And I think that by no means, I mean, Bitcoin is more transparent, right? But it's not immune to this, because fractional reserve is a concept that is an inherently human concept, just the way humans are not perfect, right? That way we have this idea that we have something and we're greedy, we try to make more out of it, and maybe, you know, hope that the future will be great. And so we start to do this fractional reserve thing. And I think Bitcoin is not necessarily, we often say it's immune to this, right? And we hope it is, in fact, right? But I think time will tell if that is really true, or if some of these, you know, layer twos, which you can argue Wall Street is really another layer two as well to Bitcoin in a way, are gonna, so to say, paper over Bitcoin as well. And it becomes the system that in the end, you know, all the OGs are gone. Some institutions and regulators are taking a hold on it, and it will go down a very similar path than gold. And I think just as much as like there is now a movement that tries to bring gold back, right, and says, hey, let's, you know, do fully allocated gold on the blockchain. I think this is also a very important concept to keep in mind in Bitcoin, not to start with this in the first place, and for the community to continuously engage in this. And in a way, it's the same battle that, you know, both communities are fighting. So when there was this famous duel, I guess, between Schiff and ZZ in Dubai, right, last week, I think it's foolish that the gold community and the Bitcoin community are fighting against each other. Instead, I think those two communities should really fight the same fight, right, which is sound money and not fractional reserves, and not allow that to happen to Bitcoin, and to get gold back from that. And I think that is the real, you know, the real pathway to prosperity.
Well, as we're running out of time here, I wanted to get each of your reactions to this big news we heard out of the U.S. yesterday with the CFTC and specifically Commissioner Pham announcing this pilot program to let U.S. regulated derivative exchanges use Bitcoin itself as a form of collateral for trading on regulated financial infrastructure in the U.S. rather than just cash collateral as we have with the CME today. How do you guys think this impacts, you know, the institutional gravity we're talking about here, or the market structure and the opportunity for Bitcoin in the United States specifically?
Well, I have some firsthand knowledge of, you know, derivatives exchanges, given we run one, in which collateral tends to be used most frequently on those derivative exchanges, and it's Bitcoin. So I think it's pretty meaningful. I mean, frankly, it's some of these things are baffling in how obvious they are and how long it takes for them to come about. But look, I mean, all of these steps. I mean, they obviously, the regulators, they, you know, in a lot of ways move at a glacial pace. But you know, when you get these, I mean, to her credit, you know. Acting Commissioner Pham Chair Pham is not one of those, and is actually moving fast and getting a lot of shit done, which is fantastic. Leaning into innovation, you know, not just crypto, but that's of course a big piece of it, but more broadly, which is fantastic. So I think, you know, the more of these steps that we can see, the more points on the board, it's awesome. I mean, it just, you know, increases the you know, the value utility of being able to trade in hold these assets.
Yeah, I agree. I think like be it in like DeFi or CeFi, right? Like having the asset as collateral actually unlocks a lot of utility of that asset itself, right? I think the first stage is that, okay, how do you get people to understand about Bitcoin? How do you get people to start trading Bitcoin or holding Bitcoin? I think we're already past that stage, right? We're still far from like mass adoption, but we are somehow there, right? I think next stage is how can we improve the efficiency of like holding Bitcoin? How can we do more with that? I think this is what like the whole industry should go through. And I think all different regulators will have different flavor, they have different pace in doing the regulations. But I think overall, we're definitely seeing more of these like Bitcoin-friendly like regulations that will unlock like the next phase of Bitcoin in terms of adoption.
If you would have to put Bitcoin and dollar on a scale, probably Bitcoin is in one extreme and dollar in the other, as such as that Bitcoin is probably the most performing asset and continuously probably going to be it as adoption continues. And dollar, you know what you have, right? It's like always one, and somewhere in the middle is probably gold. So I think it's amazing. I think it's a sign that the adoption continues, and I think Bitcoin is a great collateral, and I think it probably will become an even better collateral in the future. And in the meanwhile, having a lot of margin loans, especially as a Bitcoin miner, actually, back in that, I moved some of those over to be now backed by gold, by XAUT, actually, not a joke. Because of course, like when Bitcoin comes down, right, then you get all these margin calls, and that's pretty sad, especially if you need to sell, because you really don't want to sell, right?
All righty, gents. Well, thank you very much. That's all we have time for, but please join me in thanking our panel.